So you've started a new business and you're trying to avoid frustration. You don't want to go off on the wrong foot. You want to do things the right way and just give yourself peace of mind knowing that things aren't going wrong. These things are big things that can go wrong and that you want to avoid to keep yourself happy and sane and things working smoothly in your business for you and your employees. One of the first ones is your payroll taxes. These are due on weekly, monthly, annual increments. And by not doing these things, you can lead to a felony offense because the taxes you withhold from your employees' checks are more like a trust fund than they are actually cash that is yours because you withheld it from their checks, so it's their money. So by not paying that in, it can be a felony offense. So these are things that you just be sure you're paying in those payroll taxes. It's a huge headache when you get behind. There's penalties, there's late fees, there's interest. All kinds of things. You can lose your business. There's just big things that can happen by not doing this. Another one that's very similar is your sales tax. Not paying that timely, you can lose your licenses. If you're a restaurant or a bar and you have liquor licenses and things like that, you can lose those things because you've not paid in your sales tax. For a lot of the licenses you have to show no tax due. And so if you're not paying your sales tax, then you're going to not be able to get your licenses kept up to date. Another thing would be getting into a cash flow crunch with your accounts receivable. You've billed all these people, you're making all this money, but you've never received the money. And so you're in a cash flow crunch. You've got a nice fat bottom line, but no actual cash in the bank to do any actual business and pay your expenses. And so when your vendors get mad at you because you're not paying them and they stop supplying you, you can't do business very easily. And we also have a cash flow video out there. So if you want more information on how to best manage your cash flow and what it is, see the link below. Another thing is huge that everyone comes into our office and says, well, I paid off a loan. Loan principal does nothing for your bottom line. Not saying you shouldn't pay off your loan, but if you think, well, I paid off my loan, so that lowers my income, that is false. Factually inaccurate. Do not think that a loan payment is a deduction to your business because it is not. And so along those same lines is, okay, you made $50,000 this year and you go pay off a $50,000 loan, and then it comes time for tax time and you have $2,000 tax due off of your business, but you don't have any cash left over because you used all your cash to pay off a loan. Well, you want to be sure you're saving enough cash back to pay your taxes if you are going to pay off debt and to continue in business. So keep your emergency funds and rainy day funds. You don't want to spend all your cash and not be able to continue doing business. Again, watch our cash flow video for more information on these things. Another really, really big one, I think, is not getting advice, not finding a trusted CPA, a trusted source for good information. It's not your job to know everything about taxes and bookkeeping. It's theirs. They've gone to school, they have the training. So find someone to give you good, solid advice from day one. Don't start your business, get into trouble, and then try to go find one. It's frustrating for you and frustrating for them, and will increase your cost when it comes time to find a CPA or an accountant if you have gone down the wrong road. So get solid advice in the beginning. And similar to that would be choosing your wrong entity structure. You started a business, but you chose wrong. You should have been an S Corp instead of a partnership, or all of that was unnecessary and you just needed to file a Schedule C and be a sole proprietor. This can save you money or cost you money by choosing this wrongly. So be sure you're choosing the right entity. For more information on different entities, we have videos on that. Check out the links below to our series on entity structure. Another thing would be not preparing for tax time. After 12/31, there's nothing you can do to save taxes. Once the year has closed, you can't go buy equipment and say, oh, this is for last year, take it off my taxes. Doesn't work that way. Once you've rolled into the next year, it's a new year, a new taxing time. So be sure you're getting advice and you're looking at these things before 12/31. Once you found a good accountant, having at least quarterly check-ins with them to figure out where you're at and what you need to do to save taxes is really the best for you and your business, because by just waiting until the end of the year and calling and saying, oh, what do I need to do? You've waited too late. Like, your accountant needs to know where you're at, and you need to know where you're at to save money come tax time, because once you've rolled into the new year, there's no going back. What you owe is what you owe, and there's nothing you can do. So again, this is just a few of the mistakes you can make in your business. Not saying once you've made them, you can't come back from it, but it's a whole lot easier if you just avoid them from the outset. So please avoid frustration by avoiding these things. Thanks. Have a great day. Subscribe and hit the like button. Have a good day.